you perform.
Thank you so much.
You're an amazing human being and an amazing stock picker.
Always a total
I think,
pleasure and delight.
Concept. Yeah, hi. So, guys, welcome to the next edition of FINtastic Talks, and thank you for always taking out time and being with us for these talks. And this is actually a super exciting time because with the war, the markets have been going up and down, and it's been a very confusing state for most of us. Sometimes we see an opportunity, other times we see a threat, and we have seen some major corrections in some major names in the market, and I'm very excited that today we have probably one of the best names in equity market, Mr. Raamdeo Agrawal, with us today. So it's a very exciting day for me personally to be talking to you because the market out there is exciting. If the market was flat, then we won't get the excitement, and the fund managers won't get an opportunity to get you the right buy or sell. And that's what they are supposed to be doing for you. They are supposed to be working on your money. There is an old graph which is shown by a lot of the mutual fund distributors and mutual fund companies, which shows that how between 2008 and X period, the market was virtually flat because from one high to another high, it had reached. But between that time, the funds had delivered a 14% return because of the fact that they were buying and selling and they were taking active calls. And India has been one market where active funds have actually outperformed the passive funds, and which is rare and unique, but that shows the province and the capabilities of the Indian fund managers. And to a certain level, that here in India, you do require stock picking. So there is a little bit of a negative side to that also, that you need to have some amount of stock picking. But that makes life for people like us and you more exciting, and there is a lot of wealth creation opportunity out there. So without further ado, I'm very pleased to invite Mr. Raamdeo Agrawal to join us for the talk today.
Good evening, all the viewers, and happy to talk to you, Sanjiv. So I think without wasting time, let's go ahead and have a nice chat, So I'm really pleased to be this evening talking to you all.
Well, it's great to have you. And I remember our last talk was in the height of the COVID pandemic, and you were quarantined in, somewhere near Bombay, and we were there, and the sound was, a huge challenge because of that. We were all not used to working from home, and we didn't have the right infrastructure. So Ramdevji, let me start. I like to start this talk in a slightly different manner. That you have done and you have achieved so much from a normal Marwadi family to where you have reached, and how you have created this thing, and obviously your what has been the background. How did the whole journey start? Tell us a little bit about your childhood, about your parents, and it'll be great to understand that about you.
Yeah, thank you. So my background is very humble in the sense that I came from Chhattisgarh, and that too little rural background of Chhattisgarh. So yes, I come from a village from Raipur. I mean, close to Raipur, there is 20 kilometers away. There is a village, Nagpura. There I grew up till 5th standard, and then I came to Raipur for my schooling, and then I came to Nagpur for my undergrad and CA from Mumbai. So there has been and I grew up in Hindi medium. I had and with a very kind of government school or village schools, very skeleton kind of infrastructure and all, in every aspect of it, whether teacher, whether sitting the same colleagues and tutorial or everything. So we just, I scrapped through, or I somehow reached doing CA, that too from Mumbai, and changing the same medium from Hindi to English. That was a very big challenge at the age of 23, 24. So my first big challenge was in passing CA. I had 3-4 attempts, and actually my handwriting was very bad. So at the age of 24, I changed my handwriting. I changed completely handwriting, and one time I failed because I couldn't write in good handwriting. So then next time I did speed writing in good handwriting. So then, then I passed very clearly. So I was confident that I can do it, but just that handwriting was not helping me. And in '83 I passed my CA. After that, by that time I was kind of already stock market buff, and my brother had given me some money of about 4-5 lakhs rupees, and that I advised my brother that you should be investing in stock market, and we had no clue how to do it. Then with my CA background and a little bit of corporate balance sheet and all, we started in I started learning investing with the help of my brother's money, and and those were primitive times. I mean, and we were so excited. Like at middle of the night, also you can wake me up and talk about the stocks. And I used to have my own balance sheet library of 250 companies. I used to manage that. And weekend, I used to only collect balance sheets. So it was complete passion of stock market, and that CA background helped. And so I think the passion coming as a profession. Then later on, I said I can't do anything in life. I will be in the stock market. That's how I started my equity research, 85 to 87. And even research was not a very set profession at that point of time. So there was one gentleman, late Mr. R K Piparia. He gave me opportunity, and I went with my balance sheet library to his office, and I started working for 2 years. We wrote a book jointly, and then I said, now enough is enough. We must make some real money. And that's where I started Motilal Oswal with Motilal ji, and we came together. We were hostel mates. So we came together, two bosses, one peon, zero capital. So, and one client, that was his brother. That was the starting point actually. One of the biggest actually resource was his brother, who was a big client, who was wanting to do sales from, purchase or sales from Ahmedabad. So that became a backbone of starting Motilal Oswal. And we started very humbly. I mean, making 200 rupees, 300 rupees, 500 rupees a day was a big deal. And it was a proper startup. Motilal Oswal was a startup at that point of time, zero capital and leap of faith in the market. I knew everything. And from day one, we were profitable. So if you're not employed capital, so your profits cannot be very high. But yes, it was profitable. And I knew what to buy, what to sell. So advice was free, research was free, advice was free, and clients started coming in. It was a seller's market. Broking services were not there in the sense that clients were more. India was opening up, and we were there to just serve at that point of time. So that allowed us to make an entry. And then it was in next 4-5 years, in 1990, I think really 4 years were, I mean, we enjoyed, but when I look back, it was tough. And we earned about 15 lakhs rupees, and we borrowed another 10 rupees from client, brothers, friends and all, and we bought a membership. At the moment we bought the membership, Harsha Mehta bull run happened, 90 to 92. And in those 18 months, we earned 30 crores. And 32 crores, 30 crores, that time was like $1 billion, for us. We had not seen a crore. And then market crashed faithfully, and that 30 became 10. Then I said, now nobody can throw us out from here. And so that's how, like we came and then, immediately after that, I learned about Buffett in 93, 94. Read his all the annual reports. I mean, he was a guru found. I mean, I found my guru out there. And there I learned that I don't know anything about investing. We are excited. We are lucky to be there, but actually we didn't have any skill. We are only lucky to be there. And when I read, then I realized that what all needs to be done. And that's where I started building my prowess in terms of understanding what investing means, what is the cash flow, what is the importance of ROA, what is the importance of growth, how the valuation should be looked, what is the margin of sale. Whole lot of concepts kept on coming through my from my wealth creation studies. When we started doing wealth creation study, I mean, now I've done 26 of them. So every time we learned something, and that became the way to improve myself, because markets are changing every day. Markets are not same. Even concept of value is changing every day. Though one can say that value is present value of future cash flows, but how to estimate that? and how the markets look at that. So those things keep changing depending on the interest rates and the optimism, pessimism in the economy and all. So and then the role of technology also. So a lot of things we learned along the way, and that's how in last 40 years, or say I would say 1980, I bought the first stock, and now it is 22. So 42 years of journey in the stock market. It looks like again, I feel as if I know as little about the market as I was thinking in 1980. Probably in 1980 I was more confident. Today I feel that there is so much to know.
No, in fact, things are changing. They are becoming so dynamic
Yeah,
and so much competitive also. So, in
yeah,
fact, everything is changing and you have to be on top of everything. So, in fact, there was a nice question from a gentleman called Jitendra Kumar. So, he says, yeah, I am also from a small village and
yes,
I also want to be successful for all of both of you. So, I will give you my two bits. See, Jitendra, success is all about hard work. And there is a question, there's a thing tell people that people think knowledge is equal to success. It is not. Okay, because otherwise every engineer would be successful, every chartered accountant would be successful, every lawyer would be successful. Because knowledge सबके पास है. This knowledge has to be converted into belief, and that happens by practice. Like Raamdeo ji shared his own story that he was buying, selling stocks, he was going through 250 balance sheets. That he became successful because he got confident that I know what to sell, what to buy, when to buy, and I am able to give advice. Same is with me. Like, when I started my own journey, people say that, look, even today I spend so much time in learning because things are changing. Even parallelly today, I'm doing courses from Stanford, I'm doing courses from Kellogg's. Why do I need to do it? Because things are changing. The world is changing. The way you manage companies is changing. The products are changing and the technology is changing. And we all so and but even if I get the knowledge, won't make me successful. I have to practice that knowledge. So the knowledge I practice. When I have the belief that I am the best at it, I can do it. That is when you become successful. Ramdev ji, would you like to add something there?
study in primary school in village basically does not mean where you come from. Matter is that I want to become like. Yeah, so I think everybody has to chart his own course because the times were different. The opportunity was different in 1980s. It was a barren market for us. Competition was not there. Professionals were not there in the market. So we were early birds in the market. But today, opportunity side has exploded to a different level altogether. Like market cap is 350 trillion. That time maybe 100 billion was the market. So today, and we have become much more global. And good thing about the stock market is that any skill you pick up on investing or whatever, it is as good in globally. I mean, you are a global citizen actually. I can go and practice I can do in money management in America, Japan, Korea, wherever you say, we can go and do that. So it's a very, very universal skill. The issue is, are you passionate about it? Are you passionate about and then what you said about the hard work, because once you are passionate then you don't mind working hard towards that. The guys who play cricket, I mean, at times I feel, how do they stand in the the bright sunshine and this 35-40 degree, and they have the full day session out there and they're having fun. So that's not my cup of tea, but the guys who are there, they enjoy that. So it is, everybody is cut for something. If you are cut for this, nobody can stop you. If you are passionate about the stock market, nobody can stop, because stock market is very simple in my mind. Price and value. Price everybody knows. Value nobody knows. Can you find your way of understanding value better than rest of the pack? And that problem will remain throughout the last 100 years and next 100 years. So if you have a good understanding of value, how to assess value, I think you will always win. Whether you are a chartered accountant, you are a BCom, you are a metric fail, doesn't matter. So long as you can figure out that there is a value out here away from the price, I think you will win.
That's very well said. And guys, I think it's all about practicing. It's all about being able to do the right thing. So knowledge has to be converted into a skill, and that skill is your belief, and that belief will bring you the success. So success can be there for anybody, provided you are willing to put in, and also don't follow anybody else's path. You have to charter your own path. Today, if you want to succeed, you have to find that वो बोलते हैं ना unsolved problem. You have to solve some unsolved problem. You have to get that niche, and then you have to come in and you have to be the best at it. So, रामदेव जी, एक और मैं क्वेश्चन पूछता हूँ आपका. So, you started your stockbroking. A lot of people start a business and they end at that business, but you didn't stop there. You started your own AMC. Created a lot of aligned businesses together. So, what prompted you to do that? Because there are so many stockbrokers and so many successful stockbrokers who never went beyond being stockbrokers. And today, when the stockbroking market has got disrupted, they don't have a business. The old big names, they don't have a business today. Actually changed with the time, and you started new things. You started your mutual fund and other things. So, what prompted you to do this?
So one is the growth mindset. We always, with a growth mindset, we are always looking ahead, and we always wanted to be in the marketplace. When we started in 90 and we were BSc member, so in 94 the NSE membership came, and that time NSE membership was not that popular. I mean, you have to pay some 50-60 lakhs and buy that. We decided ourselves that just to protect our career, because we are young, we have decades ahead. Just to protect that, let's invest this and take the membership. And at that point of time itself, half the BSc members, they didn't take the NSE membership. So that put them off from the track. So like that, on every, as you go along, as you rise, as your net worth grows, as your connectivity grows, you will keep getting bigger and bigger opportunities. Now, whether to seize those opportunities or not, that is a key issue. So our mindset has been to build businesses. We build company, something which lasts beyond us. So we always create a delegated environment. We are not there in ops. It's all being run by the managers, the business managers, and the people at large. And that allowed us to look at not only expand our existing business. One of the largest retail franchising all over the country. Second, also to look into adjacent businesses like the cross-selling, the products which can be sold to our existing clients. Whether it is a mutual fund product, whether it is so all the products we wanted to sell to the clients. So that's how we started getting into that. So I think that it is the growth mindset and opportunity. So we didn't go outside the financial services. We didn't, and we were also quite aware of the capital allocation in the sense that whatever free cash flow is there, that must come either into the stocks or a business which is adjacent to our existing business. So that's how the compounding machine was built in last 35 years. And in fact, it is now much more focused on to seeing that free cash flow goes into building portfolio and the businesses.
That's very well said. That's very well said. So, Raamdeo ji, there's a lot of question on your investing philosophy, because you are one of the most well-known investors in the market. So how would you explain your investing philosophy to those who are watching? That how should they learn from you, and how can they follow your investing philosophy to create money from the market?
Yeah. So my thought process have been shaped largely by Warren Buffett, Charlie Munger, and Phil Fisher way of thinking. So I read those. I read all those books, their writings, their annual letters. All those things have been the foundation of basically the philosophy. But philosophy is very simple. We call it QGLP just to make it so. Even when I get confused, I also go to the same place. Like, does it fit in? So quality. So what is quality standing for? Quality means quality of business, top quality business run by top quality management. If you have got these two right, you cannot lose money. At what pace you will make money, that will be determined by the growth and the price. But if you get these two right, you are bound not to get sunk. You'll make little less money if you buy expensive. If you buy it very cheap, you can make humongous amount of money. So the first is Q, then growth. Growth is extremely important in value creation. And so not only growth for next quarter or next year, but growth for next 5, 10, 15 years. And that's where I think your vision or visionary thinking or outward, forward-looking thinking is important. to understand the future of the business and future of the management, or future of the business in the hands of the management. See, if you give an opportunity to say very good management, say what we call it, say Tatas or HDFCs or ITCs or Hindustan Lever, all these big guys. When any business opportunity comes in their hand, they can actually exploit to the hilt. And so one is of course the opportunity size and the quality of business. Second is the management, and third is the growth. And so India is a growing country. I mean, 6-7% growth is kind of a very much taken for granted for next few decades. So that gives you a growth potential in a company, and then longevity of growth and longevity of quality. So L is that longevity part is very important for me. And then finally the price. Having these three things, how do you value it? So if your business, the moment it doesn't pass Q, then I don't bother about the rest of it. The moment Q is through, then we get into trying to understand what could be the price, what should be the price, or what should be the value underlying. So if my business is very good, it is earning 25%, it is secular business and managed by one of the top guy. I mean, very good guy with massive energy, massive integrity, and passion. When you have this, see, so what is a good business? I think the real thing to understand is what is good business. The business which can earn significantly higher than cost of capital, relentlessly year after year. That is a good business. So a business which earns say 10%, I would not call it a great business. It might be average, because risk free itself gives you 7-8%. But a business which can earn like my head starts turning when it is more like 20% or 20% plus. So the moment business shows the potential, whether by margin or margin multiplied by asset turnover, that also you have to see from where it is coming. So as you see, the quality of business is good, and let me tell you, 80% businesses are useless businesses. 1 out of 4, I'm exaggerating. Actually, I'm underestimating. Not 4 out of 5. In fact, I would say 4.5 out of 5 are bad businesses. So there are very few good businesses. You have to be very careful, and a lot of industries also don't know their businesses are bad. That is the beauty of it. Second,
Yeah.
okay.
My baby is the fairest. So
Yes, you said it. Second is the management, which is a crucial thing. And here you have to really judge, and that's why we need to meet people. That is where you have to judge whether the guy is competent. That is known by the numbers, whether he is competent. He will always say, I'm competent, but I can see in his numbers whether he has delivered good numbers or not. What he said, whether he could deliver. So one is the competence. Second is the growth mindset. Is he planning for bigger and bigger game? I mean, is he talking about, if he's running a bank, is he saying that I want to be in top 5 in next 10 years? Does he have that kind of plan? Or is he happy with whatever he is right now? So what is the growth mind? Third is the passion. Competence, passion, and so that growth mindset and passion comes together. Then third, and actually the first, is he a honest guy? Competent and honest. So honesty is non-negotiable, because
but how do you assess that? How do we know this person is honest or not? Only time will tell, but we can have a perception.
yeah, so that could also be the thing, but you can see from the circumstantial thing. First thing is whether he's paying full taxes. A lot of people, because easiest to cheat is the exchequer. You can dodge the exchequer very easily. So understanding that they are hard honest, and then second is their suppliers, their ex-employees. They will talk about them. Their bankers, their other stakeholders. There will be somebody who will vouch for him. The competition. That you'll find somebody who will definitely vouch him that these guys are above board. So once that is there, your lot of work is done, because I can check his passion, I can check his competence, but it is very tough to check his integrity. And once or twice I've got stuck with that problem. So it is very important to get your business and management right. Rest all is number crunching. So that's how quality and growth. Once that these two things are done, then you are looking at the price. So if my growth expectation is 25%, and if nobody knows the story, see, every story starts from somewhere. can be ahead of time, you can be in the time, and you can be way beyond the time. So when I look at the story, and the story is available at about say 12-15 p multiple, then I realize that there is no. And then when go and check the shareholders list, there is nobody. There is no big guy. Means this story is absolutely new coming to me. So at that point of time, you have to take your call that okay, this story is underpriced. I would say, what should be 100? It is available for 50 or 60 or 75, because price is there. Then you can go about doing your stuff. And particularly if you're a small investor, you can practice it very well, because I want always when this kind of companies come, I want 2% of the company, 3% of the company, which might not be available. You want 500 shares, 1,000 shares, they are available. You go at 9:16, you can get it in the morning. So for a small investor, practicing this is very easy.
Yeah, that's again some very very useful tips. So, but when you say कि price का आप बोलते हो, like there's also a lot of questions that there are a lot of very good companies, but they are always overpriced. So how do you get the right price for those companies? Like
Yeah.
and classic example of that is Kotak Bank, where people have been really liking it, but for such a long period of time, people have been saying it's overpriced.
Yeah. So if you buy overpriced, your returns will be muted.
Hmm.
See, if you are looking for return, I mean, if you want to make 10-12%, you can buy these and hold it for a long time. But if you want to make 20-25% compounded, then you have to have some advantage in buying price also.
Hmm.
I mean, buying price in relation to the growth. It is not absolute. I mean, a company which is growing at 50%, if it is available at 50p, I'm getting it cheap. But a company growing at 25%, and if you are giving me at 25, it is far more expensive compared to 50 at 50. So it all depends. See, understanding power of compounding is extremely important here. I must bring this subject here. Please understand power of compounding, how the compounding works. Rule of 72. 72 divided by year gives you percentage at which it will work, and 72 divided by percentage will give you number of years for doubling the money. And everywhere it is CAGR, compounded annual growth rate. But what does it mean? How is it being calculated? That nobody is aware of. So that's what is the very few. Actually, most of the people have heard about compounding. Very few have bothered about how does it work, and few actually practice it.
Right, but
Sanjeev ji,
where,
I'm telling you, you'll be surprised. I mean, you know it all because you are in financial planning. But I mean, I have so many employees here. I've been talking so much to them, but it doesn't come that naturally to think compounded.
even today I have learned something new from you. But in the sense, yeah, this is something that I always knew, and maybe what होता है ना, some things you are practicing on the subconscious mind. But the way you put it, that a company which is growing at 25% at 25 PE is a much more expensive stock at a company which is growing at 50 times, 50% at 50 PE. So yeah,
Yeah,
so when you put the power of compounding behind that,
yeah,
because then you are able to actually demystify that
yes,
yes, if a company is able to grow at 50%, then even at 50p it is cheaper, because
much,
this company will double in 1.7 years, whereas the other company will double in 4 years. And if
yes,
we are looking at a 10-year sort of a portfolio, the sizes and the scale will be totally different. So, this is the philosophy where I used to do it on the. Now I realize I was doing it on a gut feeling, but I wasn't actually calculating the CAGR and the IRR and the
yeah,
other things at the back. But this is a very good formula that you have given to me for my, own advice and my own clients. That this is something that we will love to start calculating, and that's a very good way of identifying the right companies.
yeah. See, that's why the digital companies are exponential companies, because digital as a media is a non-linear media. See, when you go and set up shops, you can set up 100 shops, 1,000 shops, 10,000 shops. But when you put it on successfully on the internet, you are overnight, you are across the country, across the world.
Hmm.
So it's very exponential if you're successful, if you're good. So that exponentiality has to be understood in valuation.
Hmm.
And that can come only if you understand the compounding.
So, here let me ask you a question. See, and this is a question that comes to my mind, and I'm sure it's there in the mind of a lot of
Yeah.
investors out there also. Like when we started dealing in stocks and when we started buying our own stocks, that time there were a lot of companies which could do an IPO,
Hmm.
and and you could identify companies which were still very young and they were still good businesses and they had high growth potentials in the future. Obviously that time it was obviously risk was always there, and that was never clear and the risk was there. But aaj ki date mein in this market, when the market mein you have very few companies are able to do IPOs, ठीक है, and you have only very select number of companies available, and most of that play that used to happen of being able to identify a good company is today being done by private equities or other funds. So how do you get to be a part of a Infosys, like a play 20 years ago, or other plays like where people have created huge wealth over a period of time? How do you identify those companies today? How do you participate in them?
Yeah. So day by day it will become more difficult. But if you have a method in the madness, say you are understanding, say see, because what happens is that business conditions change. See, stock is listed, say 2,000, 3,000 companies are listed, but all the companies are not doing well because all the businesses are not doing well. Say right now, because of COVID, a lot of businesses were dislocated, whether it's a hotel, whether it is a retail, whether it is aviation. I mean, I don't know, I can't count it. There's so many businesses which are dislocated. Now, but every company in that business is not dislocated. Some are kind of ruined, and some have actually benefited at the cost of the other guy. So you have to go and actually listen to the story. See, quarter results come, and then or some stories you hear this. I mean, there are many ways to pick the signals. I mean, one is of course from the stock market. Second is from the quarterly results. Third, you are generally looking around and listening to the stories from the newspapers and other places, and then you go and actually listen to that story from that guy. What really he's doing. I mean, I just met a management, and he says that he's benefited out of the container crisis. See, his competition was from imported stuff, and imported those products have become like humongously expensive. So now the domestic purchasers, they are chasing him for the product. Earlier, 2 years back, he was chasing them. So today, the tide has completely turned. Now, how will you know unless you talk to him? And that changes the earnings profile, growth profile, and has the valuation.
Yeah, I fully agree with you. In fact, as one of my passions, I do a lot of startup investing.
Yeah.
And when you meet the promoter, you talk to them, you talk to the opportunities. And जैसे आपने एक बात की, there's one of the promoters I mentor. He's done about 800% increase in growth in last 2 years because of this. That what he was manufacturing was very good, but he used to find it very difficult to sell in India because he was competing with global products, and that global product supply chain has today dried out. And where he's now, he has got the whole market to, for him today money is the only constraint, and there's so much this thing. So when an opportunity is going to come for you, nobody knows
Yeah.
that. So that's very interesting. And asking a question in that sense, like you talked about your investment philosophies. So there is a gentleman here on the chat who's asking this question. Hansal Sajish is asking, Ramdeo ji, what are your biggest investing mistakes? So because learning is always not only from the right things, but it is also from the mistakes. So what are your biggest investing mistakes? And if you can just explain that, and what did you learn from them?
See, the biggest mistakes are yet to happen. I must tell you that. Because when you are small, your mistakes are also small. I'm talking about financially. Like if I'm running say 10 crores fund and 1 crore I have put it, what I can lose is a crore. But when I'm running a 50,000 crore fund, I mean, I can seriously lose few thousand crores. So, and I hope to manage a lot bigger amount of money. So the biggest of the mistakes are yet to happen. But mistakes means, there are so many mistakes along the way. Because mistakes is सीखे हमने. What I've learned is out of mistakes. If my style is working 100% of the time, my strike rate would be what, 60%, 65%. So 1 out of 3 are definitely not working to the satisfaction. So whether it is a suboptimal return or outright loss, what I would say, 1 or 2 mistakes, I don't want to name them, but basically because of the misjudgment of the management. When the management turns out to be crook, if the management is crook, he is going to the hell, and he will take you also along well. So that because the destiny of the guy is clear, that he's not going to make it. But with him, he takes all the thousands and lakhs of investors who are lured in the short term by his magic, and there is no magic. So I have seen one of the biggest source of mistake is my misjudgment of the I would say integrity of the management. That's one big source. Second is sometimes I chase the stocks and I didn't buy at 100. I ended up buying at 300-400, and then from there the downfall starts. So that was another one. So
getting in too late.
And then another mistake I would say of underperform or bad performance, staying. Something you buy at say 100, it goes to 500. You sit there like now you have arrived in the scene, and you think that 500 will go to 2,500, and of course if that 500 goes to 250 or 200 rupees, and then you sell at 200 rupees. So like this, I think this last one has been one of the big source of I would say some kind of outright mistake in managing money, that you grossly overstay with your profits.
In fact, I fully agree, and that's a mistake I also end up making. That we get so busy that when you have bought a good stock, it's gone up. When to sell is a very, very important thing, because just keeping on holding on something is not the right strategy. If it's overvalued, you need to have the guts to sell it and look at entering later also.
No, at least you must trim and move on to the next one, because you can see it is grossly overpriced. And after that also you don't cut your position, then you are in that buy and hold kind of situation, like your own business. You hold it like your own business forever. Whether it is good, bad, ugly, you keep holding on. So that is my attitude to bring on to this thing. But with the public money, you cannot do that. With private money, you can do it.
Yeah, that's true. So, Raamdeo ji, going on that, have you been able to, how do you identify the honest people? Again, so what is your secret formula for being able to identify? You already shared ki, acha, are they paying taxes? Are they looking, what else, and just as adding on to it, now ESG people are talking about. So do you think that is the future? Because वो भी एक honesty का index है, that how honest you are, how ethical you are, whether you are in the right business or not. Do you think ESG companies are going to perform better than other companies in the future?
ESG is slightly more wider, and I don't know whether integrity is part of the deal in that ESG. It is more about sustainability and carbon and governance. And yes, governance, I think clearly somewhere honesty has to be there in this. So, but I think this integrity or honesty is one thing which is the non-negotiable, in terms of this thing. So one of the sources I find way to kind of measure this is when an honest guy gives a certification of the other guy that he's honest. That's a big thing for me. So if I believe in somebody and he says that Raamdeo, this guy, at least on the integrity, I certify, or I vouch, or I stand by. Those are things which are very, very important. And I don't give that liberty of certification to everybody. So that is very important, that whom you believe, how much you believe. And then of course you still keep looking for some loopholes here and there. See, if a guy is honest, You ask anybody, he'll turn out honest.
Hmm.
There cannot be a mixed report that employees are saying that he's dishonest, ex-employees are saying they're crooks or they're cooked up books or anything like that, and suppliers are saying. So somehow the honest guy comes out like honest. See, we must not mistake or confuse honesty with the competency. Somebody can be very honest, but he can be completely incompetent.
Yeah.
And typically, the problem comes when the guy is very competent. Then we tend to ignore his honesty or dishonesty.
Hmm.
But we need very competent guy and very honest guy. Both have to be there, and one is different from other.
Hmm. Really well. So we need a combination of honesty along with competency. So which is a very strong statement. And just for viewers, today, checking honesty has become an art. There are companies. So when you invest through a fund, one of the advantages you get as an individual investor, you can't spend that 5 lakh, 10 lakh, 15 lakh rupees on doing an honesty and ethics check, or even 20, 25 lakh rupees. But today there are amazing companies, like when you want to deep dive into any vendor or you deep dive into any company. Today we are living in a world where almost everything is open. So a lot of funds do make that effort to get into the details and being able to find the honest companies. So one natural question, Ramdeo ji, which are your 5 favorite companies today, if you want to answer? And that and some new ones maybe so which are your 5 latest favorite companies, let me ask you.
I think let's not discuss individual companies. Doing that because the other companies where I'm shareholder, they will feel very bad.
No, no, I understand that. So that was a slightly wrong question to put you on the spot. So, chalo, let me ask. There's a beautiful question asked by Murali KS. He's asking, what should be an investment strategy for a year like 2022, which is an year of volatility and uncertainties? So, how do you make an investment strategy for a year like this?
Yeah. So there is no, I mean, I don't have any specific strategy for 22, 21, or something like that. You keep doing, I mean, you don't swim differently in a slightly rough water or silent, I mean, cool water or something like that. Whether you know swimming or not, that is more important. So of course, that the volatile thing will test our competence, clearly, and investing is. But actually, the volatile markets give you a lot of opportunities in the sense that if a very good bank or very good tech company is beaten down to death for one quarter performance or something like that, that gives you an opportunity. If you have faith in the competence and the long-term prospects of these companies. So this is, so when the market hammers one side. See, one of the good thing about social media or bad thing about social media is that the opinion becomes one-sided. There is no there is no 50-50. It is 97% one side and 2 or 3% other side. So what happens is that with that kind of a opinionated market, it is only your conviction that you can stand up. So when this kind of opinionated what you call moves happen in the market, you can find some crazy values in the companies which you understand, and then you should be able to you should have guts to stand up against those kind of a barrage of selling. When everybody is selling, you should be buying.
Yeah, that's a very difficult to do, but
Yeah,
that always works,
it
because
always works.
goes
So
up
this,
has to come down, and whatever goes down has to go back up.
yeah, so
And
the volatile markets will throw both. I mean, something which is 100, you might be able to buy at 50, and you might be able to sell at 150, 200 also, because markets are searching for opportunities. There's too much of liquidity, and people have made money, so much money that they want to take risks, and yet in the first sign of trouble, they want to run away also. So I think this volatile environment gives you opportunities for buying, selling.
another very important question I wanted to ask you was that you are the one who brought the concept of focused, and you launched that Focus 30, Focus Fund, Invest in Focus. And that was actually, you were the first, and you are the ones who proved that. And eventually, what it was seen that it was the some companies which are giving the growth, even in the blue chip index, even in Nifty 50. There were 10, 15, 20 companies which were driving the Nifty 50 up. Remaining 35 companies were neutral or driving it down. So, there is, when you are, so what is the right strategy? Is it to have the focused portfolio or focused stocks that you have always talked about? But on the contra, there is another gentleman here who's a very regular, Madhusudan. He says that, look, contrary to that, Motilal Oswal has launched so many passive index funds where you are investing in the whole index, you're investing in 100 stocks, 200 stocks, and then you're hoping that all of them go up. So it's like a tide investing, जिसे कहते हैं international parlance में, कि it's a tide. When everything goes up, everything will go up, and everything comes down, everything will come down, and hopefully when you're invested in 100, you'll average down. So what is the right strategy for an investor looking at a fund? Should he be looking at a focused fund, or should he be looking at a broad index fund? What do you think is the right philosophy?
See, as far as the passive funds are concerned, they have a different role to play. That is only for the allocation, in the sense that you don't want to go through the trouble of picking stocks or figuring out who's going to do well or this or that. But you want exposure. See, because 80-90% of the return comes from the asset class. So if you want to be 50% equity, 50% debt, your job is done by putting 50% in, say, some kind of a debt and 50% in passive funds, say index fund, low cost and index fund. So you're almost guaranteed with 30-40 bips kind of tracking index performance, which 90% of the people don't get in the market. Getting index return itself is a big thing for the masses, I am saying. But as you said at the opening remark, that this is one market where active managers have done better than passive funds. So if you want to get into that game, then of course you have to find somebody whom you think is competent to run the philosophy is talking about, because philosophy is specific to the person who's practicing. I'm saying focus strategy because I learned this focus strategy from Buffett, and I told you my bringing up. I have grown under the teachings of Mr. Buffett. So I have learned that that's what works for me, but not for everybody. I mean, if there are a million guys, there are a million ways of making money in the stock market, and eventually you have to find your way of making money. So focus strategy is the only way I can think of. In fact, if I have to run only personal money, private money, I will have only as many stocks as much I understand. If I understand 7 stocks, I will not have 8th stock. Why should I bother about them? And if I understand 12 stocks, I'll have 12 stocks. If I understand 3 stocks, I'll have 3 stocks only. But that's a very aggressive strategy. But that is what I believe in. What you believe in, you have to figure out. How much diversification you want in your portfolio?
Very well said, Raamdeo. I think it's really well said. See, returns, guys, is a dance between risk and return. Okay, so the higher risk you take, the better moves you'll make. The lower risk you take, you may not make that moves, but you may not get hurt also. So investment is a dance between risk and return. Yeah, you will always have to understand. I am personally a focused guy. I like to invest in fund managers. I like to invest in fund managers who can do picking for me. And this is actually, I don't want to quote any numbers because but on, but what I have personally seen, one of the reasons why PMS and AIF funds, some of them have done so well, is because they have been very focused. And I don't want to quote, but they have been able to give a much better return over even a normal diversified mutual fund and over a index fund. I was yesterday talking to one of the large investors, and we were discussing where we had chosen a blue chip fund, which was an active fund versus the index. And that blue chip fund has outperformed the index so handsomely. And he was asking me why. It is just the focus strategy that maybe the stocks he chose have done better. And what has happened in the last couple of days when some of the most preferred stocks have fallen. So I'm sure that fund is underperforming. So you have to understand that also. that when there are the sharp corrections, you have to look at the longer term return. So now taking this to our next question, this is Raamdeo ji. People are asking, how do I make money from the market? So इसमें, I know this is a very simple question, yet a very difficult question. So if we are to give this advice to people who are here today, that how do they make money out of the market, what would you say?
Yeah. So there are two things. One is, first thing is strictly don't speculate. You invest. So all this 14-15% compounded return of the index is by investing, not by speculating. I'm not saying that speculation is bad or this. I don't have any view on the speculation, but investing, serious money can be made by investing in a longer run. And have your expectations set at an index level. So index has done in 40 years about 15% compounded, which is 5-year doubler. So having an expectation of doubling in 5 years and going 4x in 10 years is the right level of expectation. I would say have the expectation even lower, because you have fixed. What is the alternative? You'll go to fixed deposit. You'll go to fixed income, which is about 5, 6%, 7%. So keep the expectation low, because the return, when it comes to you only. If it is 50%, then also yours. If it is minus 10%, then also yours. But having a high expectation and little lower return, that gives you disappointment. But if you set your expectation low and every time you beat it, you feel very happy. So the real problem I see nowadays, I meet a lot of people and their expectation is very wrong. Very wrong. Earlier they used to say, we must double in 1 year. Every year we should double our money if we account in stock market. I said, better we don't talk only. Then now people are saying, now 3-year doubler is good. I'm not come across anybody who says, I'm very happy now. After seeing the larger guys, they're saying we are happy to be doubling in 5 years. So at least return expectation is getting set much more practically. I would say you talk about 6 years now, because your fixed income has gone down big time and markets have become far more efficient. So I think if your expectations are right about 10, 12%, 15%, and you are willing and you have the patience. See, what do you need? You need 3 things: vision, courage, and patience. So do you have vision that this country will give you 14-15% return? That 6-7% GDP growth compounded for next 10-15 years is going to happen or not? So whether you have that faith or not, that optimism is there or not. So I am a born optimist on that. And that has kept me well. That is one of the differentiating things. So that you have to have. Because equity market tests you every now and then. And unless you have that faith, you will not be able to reconcile with the reality of that day. So that is one, is the optimism. Second, that if you have that vision, then do you have courage to put your savings into that? And you have to put your savings when actually it looks scary. In most optimistic environment, you put your returns will be a little muted. But if you put it in the worst of the time, when there is blood on the street, you really make tons of money. Then third is the patience. Do you have patience to sit through? Because patience is needed not in good time. Patience is needed in bad time. And that's why the only people who make money out of the stock market in a serious way are the owners of the companies. Because owners, they sit in good time, bad time, whatever. They fight the crisis, but they are there. And outsiders, in first problem, they get away. So how can they make money? 1 quarter disappointment and people just run away as if this is the end of the world. अरे भाई, दुनिया in India the size of the opportunity in banking, size of the opportunity in tech are so huge. Who is going to do it? You and me are going to not underwrite. All these blue chips are going to do it. So you have to have that faith to remain invested, and the guys who have that long-term buy and hold, and that's where I commit mistake also. I overstay, I told you. So that conflict has to be resolved. But in private money, staying longer term with a good company, good business, and not bothering too much about the fluctuations, quarterly fluctuations, is the way to go. So you need to bring unlimited amount of patience. In fact, somebody said in Fidelity or somewhere there was a quote: the best performing folios are the ones who are dead.
No, you have said it very well. And this reminds me of a Warren Buffett quote or Warren Buffett speech I had heard, and one thing I really liked. So, somebody asked him this question that what is the secret of making money from the market? He's
Hmm.
saying secret of making money from the market is not being greedy, not expecting the market, not being greedy. Don't
Ah,
expect the market to give you too high returns,
yeah.
because if you are expecting too high returns, then you will make the wrong moves. You will sell at the wrong time. You'll get disappointed when you should be patient. So जैसे आपने बोला कि look, have a very simple expectation of 12%, 15% over the next 15 years. That's amazing. And there is a 15, 15, 15 formula also. I don't know, all of you know or not, कि अगर 15,000 रुपये आप इन्वेस्ट करोगे for the next 15 years and you are able to get a 15% return, this corpus will become 1 crore. So each and every one of you can take out 15,000 rupees and it can become 1 crore. All you have to do is invest in the right mutual funds, have a big heart, pay for advice. I totally believe in, good fund managers. I totally believe in good advisors, good financial planners. Because point is that एक पुराना quote है, if you throw peanuts, you'll only get monkeys. So whether you want to deal with monkeys or you want to deal with intelligent people, the choice is yours. So people, make those basic mistakes. Don't make those basic mistakes, and get the right strategy and stay. And don't be greedy. Even if you get a 12%, 15%, it's a fantastic return because of the power of compounding. जैसे रामदेव जी ने explain किया था, it's the rule of 72. 12 by 72 still means that you are able to double your money in 6 years, which is not bad. So that means in 6 years your money will be double. 12 years it will be 4 times. 18 years it will be 8 times. And if you are able to stay for another 6 years, it will be more. It will be double of that. So there is, so it's very important to have that patience and having the right return. And again, another great thing is that if you want to make serious money from the market, get into the market when there is a bloodbath out there. So next time there is a crash and when everybody is saying, "Yaar, ye khatam ho gayi, India is finished, market is the finish," that's the best time to get into the market because that's where you know that's how you will get the return. So one question, Ramdevji, I need to take up is that people are asking that Motilal Oswal has so many schemes. Is there one fund which is driven by your philosophy or strategy? Which fund would that be that they should look at that?
See, none of the funds are managed by me directly. It's all the funds are managed under my what do you call my oversight, I
Okay.
would say. I
Yeah.
mean, we spend every day 2 3 hours with all the fund managers. We try to, I mean, give individuality to all of them and keep picking, where somebody could be wrong, where I can throw some opportunity on what I have heard and all. So it's all, I mean, you have to really look at what is the style you're looking for. Are you looking for mid and small cap? Are you looking for large caps? Are you looking for multi cap? So, I mean, depending on what the customer need is, performance is only one part of it. But where exactly you think, like right now, mid cap boom because the retail participation is very high. So distinctly large cap is not the flavor of the season. But I think that's where the opportunity is building up now. As more and more FI selling happens, you will see the valuation gap between the mid cap and large cap. So at some point of time, maybe the large cap might be the way to go. But right now, the flavor is mid cap. So I don't know what you want to buy. It depends on that.
Yeah, I think very well answered, Ramdevji. And this is something all viewers today should pick up. That right now, a lot of money has gone into small caps and mid caps. And small caps and mid caps to a certain level are overvalued. So at the end of the day, large cap may actually provide an amazing return in the next 15 years. But I personally believe that rather than going in for an index, you should go for focused funds, people who are able to take a focused call. And if you are not able to do that, even a flexi cap may be a good opportunity for you where the fund manager is doing that picking for you. So, one final question for the day, Ramdevji, that if you had today 1 crore rupees corpus for you and you had to choose the funds, which fund would you choose for your
I
own investment today?
I buy only my funds.
Yeah,
So,
but which
but
fund would you choose?
No. See, actually, I have seeded all the funds. So I own 8%, 10%, 20% of all the funds, depending on how much money we have given at what point of time. Even now, incrementally, it is going into those funds only. So sometimes, I mean, it goes into my funds only. Sometimes I give a preference that, okay, basically my preference is always flexi cap, because let the fund manager decide whether he wants to buy mid cap, whether he wants to buy large cap, so that gives me kind of a diversified, most diversified fund. Otherwise, you have to take a very clear call that, okay, go for mid cap. So you are thinking that mid cap will outperform large cap. So I want to be as neutral as possible for corporate investing and things like that.
Yeah. So I think, guys, flexi cap is definitely something you should look at. And one question again, I have to ask that question because a lot of investors have that in mind. Is the with the restriction on foreign investing, that $1 billion cap having been met, and a lot of people have their the SIPs going into the Nifty, or not Nifty, the
That's
SIP
it.
into Nasdaq and S&P 500. So what is happening there about international fund selection? What will be the solution, and what is it something that people who are affected? What would you like to tell them?
See, if you have bought it, you don't have any problem, in the sense that for the existing investor, there is absolutely no problem. The problem is for the incremental money, because government has put a hard cap on how much India can invest and how much individually. So individuals don't apply because the sovereign cap has come into play, $7 billion or whatever is the sovereign cap. So I think once this war and all are over and they feel a little more comfortable, RBI feels a little more comfortable about their forex situation, or maybe I don't know what is holding them back. I mean, they should have they should have come out with a little bigger restriction, say that maybe 10 billion or 12 billion, whatever cap they wanted to have. But I think the show should have continued, because it has taken so much time and effort to popularize this and make it as an acceptable product category with the people. And now, as the momentum was picking up, I mean, now this kind of restrictions there, so I have no word to say. But authorities must be having their own problems or whatever issues in terms of clearing the next cap. But I'm sure it must be shortly done. Once that is done, then we can get back to finding best of the ideas in the international markets. We have a lot of funds in the pipeline, and this American S&P 500 and Nasdaq are there. So I would suggest that what you have, at least don't divest that. Hold on to your allocation. You know.
Yeah. So, guys, it's nothing to do with anything else. It's just that India's sovereign cap has got reached the amount of money they wanted to invest. And thank you, Ramdeoji. Today it was an amazing talk, and I think we have taken away some great takeaways about how to select the right companies, how to select the right funds, how to make the right portfolio, what are the right things to do, and what are the right wrong things not to do. And I hope everybody who's watched this talk today makes a lot of money. And thanks to you. Some final words from you to all the investors who are watching this talk today.
I would say only one thing, that the simplest thing is power of compounding. Please understand the concept and understand and start practicing it. Practice in life. That just try to understand what it means to be doubling in 5 years, going 4x at 15%, at 25%, 3 years double, 5 years 3 times, 10 years 10 times, 20 years 100 times, 30 years 1,000 times, 40 years 10,000 times. I mean, you got to really do it, because things happen like that only. Universe is compounding, your money is compounding, your wealth is compounding, everything is just compounding. So you got to get on top of the compounded way of thinking. One is to understand the concept. Second is you got to drill. The way we can speak English now, the same way you have to think in a compounded fashion. I think that will be if anybody learns that, I think it will be a huge addition to his, what do you call, I would say, fishing tricks. You can see the undervaluation right in front of you.
And I think very well said. Add compounding to your like back of your brain, that everything should be about compounding and doubling. So very well said, Ramdeoji. Thank you. I think it is our 29th edition of this fantastic talk, but one of the most interesting one. And I hope we keep doing it. We have more than 20,000 people watching us live, And thank you for everyone who came in today and helping make FINtastic Talk so successful. And thank you for taking out your time, Raamdeo ji.
You have been fantastic, Sanjiv. Thank you very much.
Thank you. Bye, everyone.